Hi, everyone. Todd Rosenbluth from TMX Redefined, and I'm joined by Brock Campbell of BNY Investments Newton. Brock, thanks for joining me.
Hey, my pleasure, Todd. Thanks for having me.
So we want to talk about infrastructure because it can be an overlooked and often misunderstood for being illiquid and opaque and inaccessible to many investors. But we're hearing more and more from people that think now might be an interesting time to take a closer look at infrastructure. Do you agree?
Oh, Todd, absolutely. So the classic attributes of infrastructure are going to be things like income generation or downside protection in periods of volatility. That's really been the hallmark of infrastructure investing for quite a while. We do see on the horizon, and why now is an exciting time to look at the space, is there are numerous secular tailwinds that are massively impacting this space. Things like artificial intelligence, things like deglobalization, reshoring, friendshoring, nearshoring, whatever you want to call it, Todd, they're all impacting infrastructure. And then things as old as demographic trends. We are at the cusp of a massive demographic trend, and we think infrastructure is going to have a big role to play in that.
So let's talk about one of the BNY funds, BKGI, which is the BNY Mellon Global Infrastructure Income ETF. It just celebrated its 3-year anniversary. Congratulations for that. Tell me how it differs from some other things, perhaps like private infrastructure.
Yeah, Todd. So BKGI, has a philosophical belief in incorporating a broad opportunity set when it comes to infrastructure investing. We find many in the industry, and we actually found this when we incepted the fund, many in the industry define infrastructure largely as 3 industries, key industries: utilities, energy, which is pipelines, and then industrials, which is going to be toll roads and airports. And we absolutely believe that's infrastructure. There's no debate. But we felt that was far too narrow of an opportunity set. So when we were designing the fund, we intentionally looked to broaden the investable universe by applying our definition of infrastructure, i.e., we believe that infrastructure are companies that have fixed assets in the ground, are earning rent or cash flow off those assets, and have a great deal of regulatory predictability. And by applying those characteristics, we were able to broaden our opportunity set to a much larger segment of securities. And importantly, Todd, that gives us access now to those secular themes. So secular themes like aging demographics, secular themes like the AI build out, we believe is enriched because we have this much larger opportunity set to choose from.
So we always hear from advisors, investors that want to understand how something can fit into a portfolio.
Right.
How can BKGI fit in your opinion?
Oh, yeah. Well, for one, if you do have a private allocation to infrastructure, BKGI, we believe, makes a great complement to that investment because it does provide liquidity. It also provides consistent income. So we believe if you already have that allocation, this would also make sense. The attributes that BKGI and infrastructure generally deliver is going to be income generation as well as protection. These businesses have much less sensitivity to changes in economic cycles. So they should perform and have historically performed a bit better during periods of cyclical weakness. One other component that all of a sudden has become very topical, I hope it never happens, but if stagflation does happen, infrastructure as an asset class performs quite well during that period. Why is that? These businesses are naturally able to push much of those inflationary pressures through their business model to the end consumer. So there's a great acceptance of a price push. And all the while, when there's economic concern or a lower economic cycle, these are resources and consumption that doesn't change based on how the economy is doing. Think of water consumption or your electricity consumption or how much Netflix are you streaming. That doesn't change really during a cyclical downturn, but you still need the pipes delivering those, whether they be electrons, whether they be data, or whether they be molecules in water.
So income is in the name of the fund. It isn't just infrastructure ETF, but the infrastructure income ETF. We're in a period where the Fed has been cutting interest rates in the fourth quarter of this year. Talk about the income generation aspect of the fund.
Yeah, absolutely. Thanks for bringing that up, Todd. I always think of this fund as being that fund that, you bring to the kitchen table, in my case with my parents, right? My parents are of a certain age. Income generation is a massive focus for them. So the beauty of infrastructure is these assets naturally throw off a great deal of cash flow. The companies we invest in deliver that cash flow to us in the form of a dividend, and then obviously we return it to our investors. We believe because of the fixed assets in the ground, because of the predictability through a regulatory oversight, we believe these businesses are terrific for delivering consistent and repeatable cash flow, which we think can be critical for many investors given which stage of their investment cycle they sit.
Well, Brock, happy anniversary to you and to the team.
Thank you, Todd. I appreciate it.
It's a pleasure joining you. To learn more about this strategy, visit etftrends.com.